Welcome back to Digits here at WSJ Live. I'm Simon Constable. Now that is a one-year chart of Groupon. The horizontal line where it starts to go non-horizontal, that's where Groupon opened back in back in October, and you can see how much it has declined since then, upwards of 72% since then. That is one discount, one Groupon or group off, whatever way you want to look at it. We got Dan Gallagher now of MarketWatch, technology editor there, to talk to us about this. Hey, Dan, that's a group off, isn't it?
It is. They've really taken a big hammer ever since their IPO, and not unlike a lot of other stocks in this newly public social media space. Zynga, we know already is down by that much. Facebook not by that same amount, but down significantly from its IPO. And I think it's indicative of the particular business challenges each of these companies is facing, but also some overall just discomfort among investors that are still trying to figure out these business models.
So theoretically, now the stock is around $5.50 a share. Is there any point at which it can not fall below, or is it just it could go to a penny? I mean, which is it?
Well, theoretically, zero, of course, is the bottom mark. Last I checked, the book value on Groupon was a little over $1 a share. So,
the book value is the accumulated earnings, basically what the company is worth in accumulated earnings, right?
Yeah, that plus cash and some assets that are in there. So, theoretically, could go to that. It's hard to know how much further they could go down. I think there's a fair degree of skepticism already on Wall Street. 2/3 of the analysts covering Groupon are neutral. And the price targets were really slashed. I wrote about that this morning. So the median now still implies some upside from the current market value, but it's way below that. So I think it's hard to know how much further it's going to go down. I think most of the sentiment says people are going to wait and see how much, if they can improve their business fundamentals before making any decisions on whether to buy.
Now, they obviously face some headwinds on getting the stock price back up, and one of those headwinds is that some portfolio managers, in fact quite a lot of portfolio managers, can't earn any stock that's priced below $10 a share. How do they get that mojo back and that stock price back up?
Well, I think there's probably plenty of growth type investors out there that would be interested if they can show evidence that either one, that their daily deals business that is showing signs of kind of decelerating, if they got that accelerating again and prove that with data, or if they showed signs that some of these new areas that they're doing, like Groupon Now and Groupon Goods, are showing enough growth and can pick up the business. I think if they showed those things, you'd probably get a lot more investors back interested in the stock. I don't know if it would go back to its IPO price or somewhere between where it is now and that point. But there's still probably a fair amount of investors that would like to play that momentum if they can see the data for it.
So if we've got anyone watching who actually bought Groupon at the offering price, would it be in their best interest just to forget the price at which they bought it and look at whether it's a good value now?
It's hard for me to make that kind of decision for somebody. When you look at Groupon and it has, more than 300 million customers, it's kind of like Facebook. The people are still bullish on Groupon. You hear the same sounds of people on Facebook. They have a very large user base, a lot of people who are used to using this particular service. And so the people who are bullish on the stock think, hey, with that kind of base, they can build in new businesses. They have the first mover advantage in local commerce. So there's a lot of potential advantages they have, but they have to kind of prove that they can start executing. They're still pretty young in that fashion.
So how long is it, do you think, before investors, big stake investors, start rattling for change at the top? Maybe the CEO gets ousted or something. Do you think that's very far away?
Well, I think a lot of these stocks are pretty protected in that sense. I'm not sure anybody can really force out the top people. I think it'll take some time. I mean, like we said, this is still a pretty new company, only public since November. So I think there's probably, there's going to be a few more quarters to see if they can actually get the business moving before I think we start seeing anything like that.
Okay, well, we shall see. Obviously, we wish them the best of luck in trying to turn that around. Thank you very much, Dan Gallagher, technology editor at MarketWatch in San Francisco, and more on that on MarketWatch.com.